Is a liquidity grab the same as a stop hunt? Now, I hate to break it to you guys, but really institutions don't really care about your stops, and they're not hunting for it or particularly looking for your stops because your volume is not enough for them. If you look at big institutions, your little positions, even if they're worth 100 to a million, it's not really worth it because you're on leverage. So you're not actually going to be looking for your stops. They have bigger fish to fry, and most institutions run off algorithms and their computers do the work. And whoever's behind the desk is normally what's called a risk manager, and he's just looking to manage risk. And if anyone is going to be moving the markets intraday, it's going to be smaller institutions and smaller hedge funds because these bigger institutions can't fill their orders in one day. They have such big orders that they're not allowed to fill it in one day. They would have to fill their orders in a particular way of when prices move. They don't fill all of their orders in one spot. Their orders are filled all over the chart. So are they running your stops? No, they are not running your stops. Are your stops placed in areas where that can be susceptible to liquidity grabs? Yes, because what's very true in the markets is that no matter what you say, for every buy there's a sell, and for every sell there's a buy. This is how the markets work. Markets always work one-to-one. Intraday traders and hedge funds, they do want to take their orders from specific areas of interest. And if you notice, those areas of interest is where price normally comes to and does not invalidate that. So those stop hunts are just bringing price back to a relevant area of interest. And since that is a relevant area of interest, you see a big reaction, normally a rejection. And as they call it, stop hunt, you get stopped out in your position. But fact is, stop hunts are not real. All it is a simple liquidity grab. This is a simple area of interest that is a very important area on the chart where we see big reaction. As always, guys, if you would like to support the channel in a free and effective way, a like and subscribe always helps. If we can get this video to above 100 likes, that means a lot to me, and it really tells me that you guys are appreciating this free content. I really try hard to put out content that actually helps you guys, not put out useless stuff. So doing that really helps. Leave your comments, I always read them, and if you're new here, subscribing is great. Down below is also some groups. If you have some questions or struggling with something, you can join those groups for free and come and message me and I'll reply in those groups. So feel free to do that. And yeah, let's get into this video. When the world actually realizes that we are retail traders and we are very limited with our resources, then they'll actually start trading profitable. This is why the whole concept of price action I see all over YouTube being made popular, because it's the reason why I traded price action as well, because I've been through all of this. I've tried all of these concepts, and really fact is that yes, trading, simple price action is true, and I'm not going to say that it's not, and it's been populated all over the web. But what you find now is all the traders who were promoting institutional concepts are now starting to also promote price action concepts, because trading is long term. And short term, yeah, you might be able, using these concepts, to get a big banger once a year, but to come in and make a process every single day. So basically, we're going to go through in this video, and I'm going to give you some examples of how these are not stop hunts and how they're actually liquidity grabs, and most important, how to use it to your advantage, because we want to be able to use these areas to our advantage. And I'm going to give you a few examples and just explain to you how it works, and basically what my opinion is about it, right? So again, this is my opinion. It could be completely wrong, but from my education and what I know, this is what I suspect, and this is how I use it to help my trading and not be, say the banks are against me. So if we have price coming to a zone, we normally say a stop hunt is something like this, right? So we have price coming down here, and let's say we see a reversal like this, and then we see a quick stop hunt here. And this will be your stop hunt, right? So this is your stop hunt, but reality, and then we see price continue up like this. The reality with this, okay, is this is not a stop hunt. What you'll normally find here is you'll find an area of interest here on the left, right? So you'll normally find an area of interest where price probably came from before, right? So this is the part that you have to understand. So if we're in an uptrend and price now has transitioned to a downtrend, there is no change in structure. So finding a 1 hour support here or support formed is not going to give you confidence unless highs are broken. If you notice here, this is high, lower high, lower high, low, and this is just making a lower low. So once we get this move here and you see the wick, if this becomes a wick like this, right? And you see the wick here, and then this is rejecting, and then you start breaking highs, your entry will be here. Why? Because this is showing you rejection. This is a liquidity grab. This is showing, okay, this zone is not where price wants to be messing around. Price is rejecting this zone, closing back in the range, and breaking highs, giving you that confidence that price should continue up. So instead of trying to get into here where price could easily come and do this again, right? Because price could easily respect these highs, come down, stop you out again, and you're like, oh, it's a stop hunt. We use this advantage to see, okay, this zone has been rejected. Now we're breaking the highs, and your entry can be in here with confidence. And then this can be your trade, which is monetary wise, pip wise, can be enough. You don't have to get into here. Once you get that out of your mind and stop trying to fall into the trap of, following these institutional methods and trying to trade like a bank, if that works for you, so be it. I'm glad it works for you. And and if it's not working for you, if it works for you, then don't need to watch this video, because you should be a profitable trader anyways, right? So why are you watching this video? But if it's not working for you, but you really believe in it, keep doing it. But once you realize it doesn't work for you, just be sure to trade something that actually is simple and works, right? So no, they are not running your stops, as I say again. So I'm going to give you some examples on the chart. I won't make this a long video, but I just want to get this video out to show you all that no one is running your stops here, right? So as I said, for every buy there's a sell, for every sell there's a buy. And yes, market will have to create liquidity. It will have to pull down to zones where there are orders, right? There have to be orders for price to continue up. And don't get me wrong, those orders are going to be filled, and they're going to be in areas where most people put stops, because your stops, if you're taking a buy and you have a stop loss, the stop loss will be a sell. So if people want to get into more buys, yes, you have to understand that that is creating liquidity in the market. But the fact is that they're not actually looking to hunt your stops. Your stops are just in places where price is most likely to pull back to, because you're putting it below significant highs, and you're putting it above significant highs, and you're putting it below significant lows. But once you realize to keep your stops in a place, and not trying to catch a move that is unrealistic, then you'll understand that, okay, yes, they're not actually running my stops. And I'll show you what I mean by that, right? So if we go and take this example, let's see, have a look for around here. Obviously GJ this week has been in a massive uptrend, and if you're selling GJ, you're an absolute, I don't know what. I'm not going to even put a name to that. But anyways, what we can see is in an uptrend we're going to have pullbacks, right? So these pullbacks, what you notice about these pullbacks here, right? So we come down here, this is your first pullback here, and this is what everyone's going to call right here, this thing right here. Let me get a nice arrow for you guys. Right here, this is what everyone is going to be calling a liquidity grab or a stop hunt. So this is either your liquidity grab / stop hunt, right? So this is not actually a liquidity grab or a stop hunt. And as I was saying below that, it is. So this is not actually a stop hunt. This is a liquidity grab. What is it? Where is it taking liquidity from? Well, it's taking liquidity from this whole zone here. So if I draw a box like this, you can see the liquidity is being taken from this zone here. Why? Because this is the last significant higher low. So we made this, we pushed out. Where did we come? We pushed out of this zone. Then this is where we made our low. So where do you think price is going to come back to? It will either come back to here, or it will come back to here. This is the last significant one, because this is made out of more than 3 candles, 1, 2, 3. So where does price come back to? Here. So where are you wrong? If price is closing below here. And that's why price action trading is very much based off of closures, because until the price closes, you are not wrong, right? So not price closes, sorry, until the candle closes, you are not wrong. So let's have a look at why, most people would have entered this trade here. So most people would said, okay, look at this, great, we have a support here, price is respecting the low, I'm gonna run my stops like this, and I'm gonna TP at the top of the range. Yes, very viable trade. What's the problem? We're not breaking any highs. We haven't broken any highs. There's no indication of price making a higher high. This can easily be, so on lower time frames, if we went on to lower time frames, what this end up easily being is just something to do this, to later do that, right? So you have to understand that this area here is a downtrend. See, this is a downtrend. Forget about this. This is the downtrend. So we need the transition. So just an hour support is not enough, right? It's not confident enough, especially after a huge heavy 1 hour candle like that, right? it's not enough to tell you, okay, upside makes sense, right? Because here we're having, we can see here we tried to push up again, we rejected. So this could just be a reaction to continue down. So then you can see after rejecting this zone, right? So if you're going to take this early option, your stop loss has to be below the zone. If you're going to just take based off the 1 hour closure, you're not going to be wrong until price closes below this or closes below the support. So your stop sensibly has to be below the support here, right? If you're going to just take this option, right? So if you're just going to take this option, your stops have to be below here. And any candle closing below this, you can look to close early, right? So that's if you're going to take the earlier option. But now, once we see that this area here, you can get the same entry, we can see that price rejected. So now this becomes a liquidity grab. Anything now breaking the highs here can be an option to entry to target the highs up here and get continuation. And now your stops can go below here because you know that, okay, if this candle is being broken, then I'm going to be wrong, right? So this is of course an hour time frame, and on lower time frames this will populate different. Now we see the same example over here, right? So where does our zone become? So our old zone was here. Now our new zone becomes this point here, right? So this is our new zone. So anywhere in here is our new zone right here. So what happens? Price pushes up. Where does it pull back to? Pulls back here. What do you get? Oh, another stop hunt apparently. This is just a liquidity grab to the zone. Until we get any closures below here, it's not wrong. And what you notice is what we're actually doing is we're on a making lower highs, lower lows. So this is not actually a stop hunt. This is, yeah, it is grabbing liquidity, and there will be a lot of people with stops here, right? So this is the problem. But the thing is, they're trying to enter too early on these trades here, and this is a very difficult subject to explain because people will argue and say, yeah, but they are running your stops. They're running. What you have to understand, guys, is they're only running your stops if your stops are there. If your stops are not there in the first place, how are they going to run it? If you're taking sensible positions, your stops are not going to be run. That's why we always, emphasize trading when there's times of volume. If you notice, this time of volume is right after New York session. This is after New York open coming to London close. This whole move up here is at London close. And you can see at time of volume, you're not getting these stop hunts, right? Here, London close around this area here. And you can see you just get nice continuation. So what happens at this area here? Well, look what we're doing, guys. We're in a downtrend. High, lower, low, lower high, lower low. Then here we try to make again another lower high, and here we make a lower low. But why are you going to be taking buys here when there's no confirmation, right? There's no confirmation to take buys yet because of, first of all, the time, right? This is not the first option. And second of all, how the candle is rejecting. So if we now go on to 15-minute, what you're going to end up noticing here is you're going to notice, okay, when is the right time to take buys? Well, obviously, this has been a key resistance area right over here, like so. This has been a key resistance area. You can see the rejection here, but we've had no change of structure here, right? We've had nothing. Yeah, you could have taken buys, but where you're gonna, if you've taken buys here like this, your stop loss is gonna go below here. But where's your target going to be? It's not going to be here. It's going to be the most relevant resistance. And that's a valid trade. I mean, you could take it like this, definitely. That is a fine trade, And look, it's 15 pips. If you're happy with 15 pips, so be it, But this is going to be your target at the top. It's not going to be extension. But to get the extension, you need to get out of this range. So what happens? We're lower high, lower low, downtrend. Now we get into a range, right? Very typical to see the liquidity grab to the downside. So people think it might break down now. So, but remember, we're bullish, right? So we're in the range here. Where are you going to buy from the range? You're either going to buy from the bottom of the range or when we get a closure. So now what we see is we see the transition. So price rejects this zone. Very important. We use it to our advantage. Price has rejected. What does this do? This closes outside of the range. What's your trade going to be like? Well, very simple here. This is your trade. Now that you've seen the range break here, you can either run stops below this candle here because it really shouldn't be closing. If you see the next candle close back in the range, you can just close your trade. And your target is going to be, first target top of the range here. Second target is going to be this resistance all the way up here, right? Or this small one right here. That could have been a better target like this, right? So this is going to be how you're going to play your trades, right? Same thing here. Go in a downtrend. Boom. Where does price change? Once we're breaking structure. So this candle... See, this is what you also have to understand. not going to be good to trade in this range. But we see the candle breakout, it pulls back. Anything now closing above this area here, so closing above your original position here, yeah, look to take trades. Where's your stops going to be? Well, sensible stops, it's not going to, you can't put stops right below this candle here, because this could easily do what it just did. So where's it going to go? Bottom of the range, or below here, even more sensible. So this is what you have to understand. So we can use these stop hunts, which are actually, where's the stop hunt coming to, as you call it? It's a liquidity grab just coming to this, retesting this zone here. So once we see it retest this candle closure here, take it up. What happens? Yeah, it's the time. You have to understand this is now coming into this is Asian session, but eventually heads up in your direction. So now, just to show you, now we will clear all drawings, right? And to finish this, I want you guys to notice, where do all of these wicks come to, right? So we'll start from the beginning on the 1 hour time frame, and we'll see where do all of these wicks come to, and we'll just draw boxes of all the zones on the chart. If I can find where we were trading, yeah, we were here, and let's see where these wicks come to. So zone number 1 is here. Zone number 1, oh, what a surprise, came to this zone. Where's our next zone? Zone number 2 is going to be here, like this. This is our zone number 2. We can say it's on this wick here. Oh, what a surprise, it came to this zone here. Where's our next zone? Right up here, and this resistance here. Oh, what a surprise, it came and retested this resistance here. What a surprise. Where's our next zone? Next zone is going to be here. Oh, what a surprise, the wick came and retested right here. Where's our next zone? It's going to be up here. Oh, what a surprise, the wick came and just tested into this zone here. If you can see on the chart, price is just retesting these zones. So once we see that, and then the candle closing bullish, you don't need to buy these wicks. You need price to pull back to relevant areas of interest. And this is something very important that people don't understand. Buying from relevant areas of interest or selling from relevant areas of interest is always beneficial. Now, this is how you're not going to get caught. Now, taking continuation trades like this, once we see support, this is different because we have the breakout. This is a pullback. So there's a different setup from when price has established a downtrend. And you see, we don't always get these liquidity grabs. Like, you see what happens. And this is why I don't believe in it, because you see, all I'm looking for, I don't care what happens. If I see the wick rejection from the downside, I'm happy. But you see what happens here? We establish a downtrend. Then what happens here? We get no liquid. This is the low. Price creates a support, but then this candle here breaking this area here is going to give me the option. This pullback now on lower time frames, because this is the hour close. So any pullbacks here on lower time frames will get me an entry in here to take price up. And just to prove that to you, I'm going to mark this up and I'm going to show you where your entry would be. So you'd see this 1 hour close and you say any pullbacks now will give me opportunity for upside. So what are we going to do? We're going to mark it and we're going to look at if we get that pullback, and how the pullback should look is we should see a pullback, lower time frame candle closing bullish like this. Your entry is going to be here, stop below that wick. So how is that going to be? And this is how you're going to refine your entry, right? So what is that going to be? 15-minute time frame. Now we scroll to where we drew, and guess what? Oh, let me see if I'm right or wrong. Are we ready? Yeah, there it is, right? Hour close above, break of structure. There we go. And I have a video on break of structure. There's your entry. Remember, because we finally transitioned. We transitioned from this point here. So you could practically take an entry here, but this is going to be safer because this is after the 1 hour close. Stop loss below here. There's your entry and boom. Wow, what a trade, right? I don't see my stops being ran here. No stops being ran here. Why? I'm just trading based off candle closures. Sometimes you will get it come down. That's just being part of a retail trader. We can't always be right. We can't always avoid this. But fact is that don't be worried in the charts. Don't be having this concept in your mind that you have to trade only when there's stop hunts. No, it's not going to work like that. Do prices move and take out? The big boys move prices to areas of interest for them where they manipulate prices, and they don't trade the opposite of us, but what they do is they use momentum in the market in one direction to eventually move it into the other direction. So there is that, it's not manipulation, but it's basically for uneducated traders. They will see it, as something that's, I have to put this in a way that's going to be simple for you guys to understand. So if people who are not experienced in the markets, they'll blame it on manipulation and stuff like that. But fact is, that's how, the markets have worked years over years over years. So yeah, to put it in a way, what I want to say is that, like, yes, you will get some movements that are unexpected, but this is just, you know, using the opportunity here for price to push down here. Then they pull it back up to be able to take the orders out, and then they use this to fill the orders. And this is also a lot of retail profit taking. Retail traders complete their trade. They're just selling at resistance. What a perfect. Where if you had a trade from down here, where's your TP gonna be? Let's say you entered here, for example, just as an example. Where's your TP gonna be? TP is gonna be right here. Where does that huge reaction come from? Right at TP. This is also a lot of retail interest, but the for the smart retail traders and also the big boys getting out. But what's unfortunate is that the majority of the forex traders and people entering the market will enter right here. Oh, look at this green candle, I'm gonna enter here. Then this big candle, oh, I've been stop pump manipulation. No, you just entered when price is already done. You can't always guarantee continuation. Continuation is never guaranteed, right? Once prices reach a point, yeah, you can expect it to tap it because it's done it before. But anything plus, then probabilities really reduce. Anyways, I've talked my head off. With that being said, take care, trade sharp, till next time. Peace.